I've got a lot of this stuff recorded for people that join our school. They can go back and take a look. Here's the thing. On a 3-minute, whether it was a 3-minute, 15-minute, or any type of moving average, if a stock can break higher like it did here, it breaks higher on a 3-minute, but the red line is not a daily moving average. It's on a 3-minute, but because it's descending in price, that means that this move was never going to hold and that you would pull back, and you did. This red line is a 10-minute period moving average, and we teach people in our school here at SMF how to apply mathematical ranges between minute period moving averages, daily moving averages, weekly and monthly moving averages. What it's going to tell you is not to buy the breakout. You would never buy that breakout. People crowded in up here, and until the 20-minute period moving average flattens out, and it came right down to 60 cents right here, but it's declining. It has to flatten out. It has to do with the blue line here. That's called a 10-minute period moving average on a 3-minute, and that's going up in price. Well, the 20-minute or a 20-day or a 20-week or a 20-month moving average, the lower between the 10 and the 20 has got the most relevancy on any time frame. So that's how you know, and you're taught here not to buy that. You could short it on the down tick, put a stop above the high, let it come down, but this was never going to be a breakout to fail. That was a breakout that was going to fail because of that declining minute period moving average on an intraday level. The SMF Pro Traders clear down here to get an entry at 229.23 because of that. We got close to a 3-minute buy signal, never did happen. So basically, the tape will be short, but you can come to www.stockmarketfunding.com and sign up and watch our live trading and how all of these things apply to the relevancy of a momentum of a trend. Whether it's an intraday trend, a monthly trend, a weekly, or a 5-day trend, or a 3-day trend, it doesn't matter. It's establishing the momentum so that you're not buying bad options on it, and you know what the pullback is like. You know what has to happen. Of course, we hope to see you here so you can learn more about how to apply moving averages. Minute period on intraday. Daily moving average is to know that here on a daily, the 20-minute started to rise off of yesterday's buying. That's bullish. Apple needs to get above this moving average right here called a 10-day moving average on a daily perspective. Okay? And that's what has to happen here. And so basically, I will tell my traders if they get a chance to buy the equity at any time during this options expiration that expires tomorrow, that we tested the 20-day simple moving average, but we haven't been declining here on that 20-day. We've been going up, so that means that the trend on a daily level, that the pullback is buyable, because this daily moving average is much more relevant to the momentum when you want to buy a pullback in an equity than it is a minute period. This is just telling us right now that, hey, we got a wick off of that 20-minute period, but it's still descending. No different than when it was over here that it is here. Then the market maker gapped it up. It's still descending. Put your order, keep it down there. Until that flattens out on an intraday level, we will not take an entry. You've been given a gift at SMF Pro Trading.